So I'm very happy to invite on stage three very distinguished panel. So to save on microphone, Pure Asset Management 100, Alex Lee, Chief Growth Officers of Jumeirah Group. Mustafa Manoon, VP of Operations for Accor in KSA, and David Garner, I guess needs no introduction, VP of Commercial for Manoon. So I wanted to start with something a little bit different this time, just because we want to make it more interaction. This panel is all about growth. So we want to know what you know and what you think growth is. So there will be a QR code, and we will ask for your contribution. Two very simple questions. I don't know if it's possible to have the QR code on screen. And please answer to the best of your knowledge. And if some of those acronym does not sound familiar to you, don't worry. I attended the previous panel on AI, and half of those acronyms didn't sound familiar to me either. So in the meantime, I will probably read the first questions while you all set up your Menti. Which is the KPI that you most related to growth? The options are occupancy, NRG, ROIC, and RevPAR. I'm very curious because you get usually different answers from different audiences.
Giuliano, do you want to remind us what NRG and ROIC
Sure. NRG stands for net room growth, and ROIC is return on investment capital. Yeah, I think we have received most of the answers. Of course, we are in a sales audience, so RevPAR is what the audience thinks drives the majority of the growth. Apologies, but the right answer would have been NRG, net room growth. We will see that in a second. And maybe we want to move also to the second question. So, which is the most important factors for you in the case you were an asset manager and you wanted to give your hotel to a specific operator? Which would be the most important factor for you to justify that decision? A brand, profit, occupancy, loyalty program. Now, this question is a little bit tricky. In hotel transactions, sometimes different rationales have applied when giving certain buildings or certain hotels to operators. But here we assume you're all investors and we all apply full business rationale. Yeah, very happy to see that. So well, it seems that asset manager and sales team are full aligned. In this case, profit is king and is what profit should be made of. So let's go back, Alex, for the first questions. What is NRG? Why there is so much obsession about it?
First of all, let me just give you some context around why I'm here on the panel today. So, as you saw this morning when I was introduced, I have the title of Chief Growth Officer at Jumeirah. So, when we were talking about growth, it sort of made sense that I would somehow make it onto the panel. But what does that mean by Chief Growth Officer? And at Jumeirah, that means that I wear basically two hats. So I wear the hat of Chief Commercial Officer. So on a day in, day out basis with my senior leadership team in commercial, I'm keeping an eye on making sure that all of our businesses that are in operation are maximizing revenue and profitability across the entire portfolio around the world. So leading our sales, marketing, revenue, distribution teams, etc. The other half of my job, though, is to wear the hat of Chief Development Officer. And that's where I get the chance to project much further into the future, is why this question becomes interesting. Because for brands to continue to protect their market share, they need to do really two things. They need to make sure that all of their existing businesses are continuing to show growth in revenue overall. And of course, rooms revenue is an important profit driver in most companies. But in addition to that, they also need to be growing the number of rooms that they have under management. And so from a brand perspective, to maintain competitiveness, and we saw in Sarah's presentation just a few minutes ago, the amount of new rooms that are coming into the market over the next 5 years ahead, for brands to stay relevant, they've got to be growing. And growth in overall net revenue under management or net rooms in the case of brands is critically important because you can only predict a certain amount of what's going to happen in the future. And the ability to control what's coming down your pipeline when working with owners, developers, particularly and investors, is somewhat a little bit out of control of the brands. First of all, you've got to convince an owner to use your brand, and in my case, Jumeirah. But in addition to that, you've also got to be able to predict what does the construction, conversion, etc. timeline look like. And at the same time, a lot of brands are continually reshaping. And so not every hotel that stays under the operator of a brand today is necessarily going to be part of the portfolio in the future. And so you have this kind of very, very organic in and out mechanism happening. And in a very large brand, some of these things don't get noticed. But in a smaller, more boutique, ultra-luxury brand as Jumeirah, those things really do get noticed. If something comes into our portfolio, obviously the world notices, but also sometimes when something exits they do as well. And for us, particularly with Jumeirah, where we have a high density of product here in Dubai, it's also the ability for us to continue to be renovating and investing in our product and making sure we have enough inventory on the shelf, as well as being able to continue to invest, basically. So there's quite a lot going on there, basically.
Yeah, and I guess, in your case specifically in Jumeirah, there is a little bit of a difference with the other operators like Marriott or Hilton that are listed in the stock market. But the stock market are usually run by people that don't understand things. So they look at the best proxy for growth. And for an operator, the best proxy for growth is how many more rooms will you get in the next years. So it's a very, very not right proxy, but that's what the market understands. So working on the numbers, make sure that the share price of those groups is kept high or on the rise. And that's why there is so much obsessions also about it.
And it also puts pressure on the need to continually be signing and acquiring. And that's where some brands face pressure of staying on track, because continuing to grow means that sometimes you have to make decisions around what do you welcome into the portfolio. And we see obviously that is a challenge for some brands as they grow at a very fast rate.
Yeah, that's been a big issue for us at Minor. We've historically for years had 8 hotel brands, but because our expansion has been so high in the Middle East, we're in locations now, say Dubai, for example, where we've actually recently added 4 more brands to our portfolio because we need that flexibility across brands to take on more properties within a certain radius and area.
Yeah. So second question is for you, Mustafa. Now, is net room growth something within the circle of influence of sales team?
I think from the answer on the first question, it's obviously not. In theory, I don't think so. But in reality, and what we see in our discussions in investors, yes, absolutely, it has a big role to play. Maybe it's on individual hotel, we can see it. But if I go back, for example, owners, when they choose a hotel or a brand, for sure they look at the profit. For example, 40% of my portfolio in Saudi, or Accor portfolio in Saudi, is owned by same owners who own multiple hotels. So for an investor or a hotel owner, when they make a decision to develop another hotel, for sure they take the profit and the return on their investment with the current operator in a big focus. So if we look at a hotel, the profit is actually an outcome from the top line or the revenue. And of course, the commercial leaders of the hotels are the one bringing this top line. So they have a very big role to play. The question always is every revenue coming to the hotel is profitable revenue? This is the question. And this is, I think, the opportunity that we keep talking about for the last 10 years, that we need really to understand the flow through of the revenue until it reaches to the profitability and even the net income to the owner. And I think this is the big role the commercial leaders should play and understand. Key example is the net RevPAR, net ADR. This is how we can really understand the flow through of the revenues converted into profit. So answering the question, absolutely, it's very, very crucial role we see today. Successful hotels give us, as an operator, the confidence to go for new owners, show our successes, and this has been proven to be the case.
Yeah, I mean, when looking for a new operator, I always ask, what is your RGI? What is your performance in your existing properties? Yeah. Otherwise, how can I bet my money, my building on this venture? So, David, then it seems to be there is a sort of a circular reference. Net room growth is something that sits in listed markets in New York City, but actually it gets done also on the field from the sales team. So what is the best the best way to make sure that when you maximize sales, you also maximize your profitability and therefore energy?
Yeah, that's a great question. So we generally look at, for every additional dollar, dirham that we're taking into a property, we want to have maximize as much as possible 80% of that as pure profit. So our flow through down to the bottom line, we have a magic metric that we want 80%. How we get to that 80% mark of all that revenue being brought in is a mixture of what we're doing in all different departments, from rooms profitability, cost of sale, etc. And we look at all those mechanisms to ensure that we get as close to that 80% flow through as possible. And that's what is expected by us as a management company, as an owner and operator, but also for our asset managers and also for our actual owners. I'm in a lucky position on this panel that Giuliano years ago was one of our asset VVPs for one of our assets in Abu Dhabi. So he has a good insight onto how we operate and work.
Yeah, we were having our own dose of fights as well, but here we are. So I've not been killed in those years, so I guess I managed to survive.
Yeah, I think one of the issues that we have at the moment is we're trying to educate all our commercial teams, from sales, marketing, PR, revenue, and e-commerce and distribution, on how important it is for the profit for the company. We spend a lot of time in meetings internal and with owners on reviews, going through full P&Ls so that everybody really understands what the challenges are, what the opportunities are. And I think it's important from whether or not people do weekly commercial meetings, strategic sales meetings, revenue meetings, however you want to talk about them or reference them, that there's a common goal of driving profit. We as hotel companies in the Middle East, we manage only. We're moving into lease, etc., but that's in the future for us. But at the moment we look at GOP is where we gauge, and most of our management fees and fee income comes from, and incentive fees as a hotel operator, and our responsibility is to grow our fee income as the operator. So everything that we do is channeled towards that goal. An owner's actual end goal is not necessarily the GOP, it is the net profit. But we can't influence what is below the GOP line, how much their overspend on the build was, what their bank payments are, other areas. We can't really affect that, and that's what they want to look at, which is why they want to impact much more on what our GOP margin is.
Yeah, and I guess in our case, it all starts from revenues, but also when we compare revenue performance against peer, and that's also where STR not only comes very handy, but it comes legally binding.
Yeah.
In your HMA, there is always reference to a comp set, and there is a performance clause. So that's why it has been put in place, because if the revenues are not as per market or above market, if you have no revenues, you definitely have no profit. That's rule number one. So I guess performance clause is also a very tricky point in any HMA.
Oh, it's very important for any commercial person to understand what is in the HMA contract for each property that you manage, because sometimes there are different clauses for different types of properties. But traditionally, a performance clause, one of them is STR, that you have to remain within 80% margin of the RGI. So they can initiate 3 warnings based on that, and in the 3rd year they can effectively terminate your management contract without any other due notice. However, there are lots of other clauses to protect hotels, but we won't go into that now.
Yeah, no, but what is worth mentioning is that if the RGI performance is not as per peer standard or as what agreed by the HMA, the operator loses the property.
Which is why it's important for the hotels every year to assess their comp set, make sure it's the correct comp set. They believe that it's right to make a change, either to strengthen it, or there's a property that's gone under renovation, change a concept, get it in approval in writing from the owners, because then you're protected for the following year on your RGI performance.
Yeah, correct.
It really goes back to the first question around how important is sales or commercial really in the success of that operator-owner relationship. And it's funny, we use the word operator selection, which operator is going to be selected. Fundamentally now as a business, owners are not really specifically looking around who is the operator based on operations anymore. They're looking around who is the brand that has the right distribution, the right desirability, the right customer loyalty that's going to allow the hotel to perform at its absolute best and deliver that market share and deliver that GOP. And so in hospitality, our guest is obviously always going to be critically important. And so how we operate our hotel and deliver the brand promise to our guest is critical to that desirability, the pricing power, etc. But the level of performance and the strength of relationship between a operator and an asset manager and an owner is fundamentally now almost entirely leveraged around the success of the commercial team. And so when you're looking at that GOP performance of a hotel, one of those two-pronged elements of a hotel management agreement, the quality of the revenue that's being generated is critically important. And that's why every brand in the room is talking about how can they acquire guests with the lowest cost of acquisition possible? How can we acquire guests directly? And OTAs have a space in our world. They help us to reach guests that perhaps don't have the brand awareness, who want to shop in a marketplace environment. But ultimately, all the brands are wanting to make sure that one of the best drivers of GOP performance is actually having the most efficient cost of acquisition.
And think here we can take it back to the gross success factor, which is the net unit growth or net revenue, room growth, because it's not only impacting the stock market and the share price of the operators, the publicly listed ones, but also I think this represents the scale. The bigger the scale the operator has or the brand has, I think this is leverage the performance from loyalty, cost of acquisition, the distribution cost. And this goes back to each property in terms of net profit and net income. So I think the net room growth, it's not just the stock market, but actually it enables the operators to do much better and to scale the economy much better than if they have a less number of rooms.
It's the best proxy for economies of scales.
Yes.
Now, going back just to the performance clause, if the hotel is not performing up to standard in the RGI, the operator will lose the hotel. So your net room growth, instead of starting from zero, will start from minus. So it's more difficult. So step number one is keep the hotels that are already part of your portfolio and grow from there. So if you don't achieve that sales, the rooms in your portfolio are potentially at risk. Now, sales and RGI are one of the performance clause. There is also another one which is based on GOP. So maybe Mustafa, maybe this question is more for you.
Yeah, I think this is a good balance in most of the HMAs. Performance test usually also for everyone to understand. When we are sitting with an investor, he would ask a very important question. How do I make sure that you are performing well and you give me the right return before we sign an agreement? So I think the RGI index and the threshold of 85, 90, whatever the agreed one, this is an external, but internal will remain the profit to the owner. So always the owners want to make sure that operators and the brand, they deliver the minimum profitability. Usually it's also around 85, 90%, again, it depends. But I think this is very important to owner to make sure that the hotel and the team and the brand are delivering the minimum expectation and return on their profit. And an owner or investor, they have always this ROI over how many years, 7% per year, for example. So this means return of investment over 8 to 10 years. So usually the performance test, it is there to make this governance and to assurance to the owner the net profit coming from the operation will allow them to reach this investment strategy.
Yeah, I would say probably out of all the clauses in a hotel management agreement, which is around 200, 250 pages, maybe the performance clause from an asset management perspective is probably the most important. It allows us, as asset manager and owners, to sleep a little bit more peacefully, because I know that if the GOP is not what it is supposed to be, then of course my loan is at risk, my shareholders will shout at me, and then there will be lots of other consequences. So that allows me that if the operator is not delivering, then I have a chance to at least close the chapter and restart with another operator and potentially reach that level of profitability that allows me to repay the loan.
Absolutely, and this is always, it's a very interesting part of the annual budget review with the owners. So usually the performance test is the risk assessment for the operator. How much I can take risk with the next year budget. So it's absolutely crucial.
Yeah. And the selection of the comp set also for me as an asset manager is one of the key part, because that sets the tone for the entire conversation and for all the troubles that you might have at a later stage with the hotel manager.
I have to appraise always our finance friends. They are always the one reminding us of this. Make sure that we run this comp set analysis first before we go ahead with the final approval. So it is crucial, yes.
Yeah. I always ask for the last 3 years of SDR performance before changing a comp set to make sure we are not losing any ground and any profitability attached to that. So just as a final round, same questions for all of you. We have discussed a little bit few topics. David, starting from you. So do you think that the sales team has an important role in the net room growth?
Well, I know what your answer is.
You don't have to agree, David.
I mean, he loves this net room growth, right? As commercial teams, we generally don't really care all that much. We have RGI, KPIs, we have GOP, we have revenue targets, we have profitability, we have management fee income targets, right? That's what we worry about, right? He worries about his net room growth. It's fine. He's allowed to, right? By the way, he's no longer an asset head for us, so it's...
Not yet, you never know.
Not yet, but you never know, it could change and then I get it paid back. But yes, I mean, look, sales play an important part. They're the frontline team who are driving top-line revenues. No matter what happens, if the top line's coming in, everything else generally falls into place, right? We all have the data, we all know what ratios we want to work with from profitability, rooms, costs, etc., how we want to operate food and beverage, at what profit margins, etc. So yes, sales is driving a key part of it, but obviously the dynamic way the world's changed and the way we move much more into the digital distribution chain, that's just us being able to maximize our revenues at a lower cost of sale, right, on a higher rate, driving more profitability. I can give you an example. One of our properties has been very active in rooms upsell program. They generated about a 9% RevPAR lift last year, purely by having a front office team who got off their backsides and upsold properly. And that took away any issue from their budget for the full year, because their growth budget for the full year was at 7%. So just if certain properties take on board certain sales or performance metrics properly, it can really influence it. But sales is the start of it, yes.
Mustafa, same question.
I will take it from a different perspective. It's not about the current performance of hotels. Actually, what I can see now, obviously, and I have Mark and our team here, actually they are becoming very integral part when we present to new owners. So having the right sales team and commercial team in our discussion with the owners is actually becoming very important than before. They are able to illustrate things to the owners, how things are happening in reality. We are receiving too much and deep question from asset management than before ever. I think now the HMA, I don't know, it takes a long time, of course, to discuss, but I think almost the owners and investors, especially, I'll talk about my market in Saudi, they want to have a brief view on the reality before even it started. And this is where really the commercial team, especially in corporate and regional level, they help us a lot to illustrate that and to have this preview to the owners and convert their vision into the reality in advance of the signing the HMA. Yeah.
Alex, same questions for you as well.
Oh, go for it.
If there is any answer left.
I'll change the question slightly.
Okay, go ahead.
You keep saying sales team, but in our industry now, it's not just about the sales team, it's about the entire commercial team and how well the commercial team works together at the property level in partnership with the corporate resources that are available to them. And so when I look at it through the lens of the entire commercial team, I want to say absolutely the answer is yes. But I want to say that the answer is yes for two reasons. One, clearly, as I said before, the desirability of a brand or an operator for an investor or a developer is absolutely integrally based on the results of the property. and how confident that owner or the developer is that that is the right brand fit for that property in that physical location with the construction of amenities and assets that fall into that portfolio. If you're building an Accor hotel versus an IHG hotel, a Marriott hotel, a Mandarin hotel, etc., you have to look through the lens of what am I building and who's the customer that I'm targeting, and how do I make sure that I choose a brand that has the commercial engines to be able to target and attract that customer. So clearly the answer is yes when it comes to both sales and the wider commercial. But I also want to build on what's just been said. I've been in my role as Chief Growth Officer at Jumeirah for almost a year now, and I have to speak to owners and developers almost every day. But a large number of the conversations that I have are instigated as a lead from the sales organization, because I have more people in the world selling the Jumeirah brand than I have in development and representing the development side of our brand. And so the sales team are a vital extension to the development team in being able to not only identify potential high net worth individuals who want to have a beautiful Jumeirah hotel, but also investors through our corporate travel, our banking clients, et cetera, And it's the sales team who are the best storytellers about the brand. It's the sales team who are very comfortable to step into the office of anybody, anywhere, and tell the story of the brand and convince an owner that our brand is the right brand for their asset in the location they're looking at. So it's like a triple threat when it comes to the sales organization and commercial. It's not just about the performance today, it's the performance tomorrow, and it's about also attracting leads.
Yeah, because you've got to be realistic, right? 30% of all our additional properties that come into the development pipeline are due from current owners who are expanding their assets. So if you don't perform, they're not going to go with you. And it's the same with the renewals. Like, we're all getting into that time now. 15-year renewals are starting to actually kick in from the peak signings back in 2010, etc. So there's a lot of opportunities now for acquisition of other properties, rebrands, etc. So everyone's very hungry for expansion.
I'll add my point of view as an asset manager. For me, the commercial team are actually my best friends. And I know it's difficult to say in a room like this, but you guys have the pulse of the market before the next STR comes out. If there is any weakness in certain demand, if some markets are not showing up or they are more rate sensitive than what they should be, you are the first one and the only one to know. So how can I gather that information? Is through having conversation with you and understanding what have you done in your trip, which kind of meetings, how much business, what has been your pain points? Because ultimately I want to make sure you also have all the cards in place to sell the property and maximize the revenues. I think we have 2 minutes, so maybe if there is space for one question. So Raquel, thank you for your support. If there is any question. Oh. Don't ask me which shares to invest. I don't provide investment advice.
Hi, good afternoon. Thanks for that lovely session. I think the insights were very great when it came to the owner's perspective and looking at HMA in particular that we're talking about. My question is more towards the reverse role and looking at what happens in a different model when we are talking about either a franchise, which we see a lot of companies opting to go for franchise and do a white labeling. At the same time, there are other options at an extreme where you would actually probably would like to go and do a lease out. What happens in that scenario? Because the perspective is obviously looking at from the operator's point of view as the GOP and, as you correctly said, the commercial impact on the overall bottom lines. But what happens when franchise happens? And in the perspective of what has happening in the market, we've seen that there is not much care when it comes to the prospects of doing the commercial sense in the market or strategies in the market.
Are you okay for me to pick it up?
Yes.
Okay. So some of the points that emerge in this conversation is that brands are very good at selling and at making your hotel full and maximize your ADR. Then when it comes to operation, there's not any major magic recipe. Each operator has very strong policies, very strong procedures on how to try to maximize the flow through. So technically, the most important choice is choose the brand, choose the operator that maximize your revenue and the profit potential of your revenues. So sometimes a franchise is a better option because you have a third-party white label manager that is able to operate at much lower salaries, and much lower cost than any international operators that comes with a big, heavy burden of stock options and lots of payrolls and benefits, and it might not be suitable for your property. So that combination is more complicated. You have two agreements with two different parties, hopefully with the same terms and the same ending date, but in theory maximize your profitability. So there is more work on the asset management, but there is also more money in the bottom line. Does this answer your question?
Yes, it does. Thank you very much. But I guess maybe I'm not completely right, but I've seen predominantly in the past, in some case studies that we always come across, that there's always a fallout when it comes into delivering and the brand equity, and you're safeguarding your brand. That's the most important part of it. And sometimes you actually lose. You have a high risk on looking at brand when it comes to franchising or.
Some brands work very well in HMA, work less well in franchise. And I think it's a priority of the group. Meaning, if I have some business, I'm trying to put it in hotels where I have HMAs rather than where I have franchise.
Yeah. But that's one example that we created 4 new brands, and 3 of them are going to be soft brands, which will allow us to have the flexibility for franchise for owners to be more liberal with how they operate.
Thank you.
You're welcome. So thank you very much for everyone. I would like to a round of applause for our very good panel. Thank you very much for making the time.